guys, welcome to this powerful, tremendous session where I'll be downloading step-by-step strategy of Forex as usual. In this video, I'm going to be discussing the concept of bearish engulfing candlesticks and bullish engulfing candlesticks. Normally, what you have to understand here is that bearish engulfing candlesticks and bullish engulfing candlesticks are like bearish sponsors and bullish sponsors. So I'll be using the currency pair GBP NZD, that is the Great British Pound versus the New Zealand dollar. I'm going to be using this currency pair. So normally, for your benefit, always do and analyze the bearish engulfing candlestick on a daily time frame. You can come on a weekly, on a lower time frame like 4-hour time frame, and look for trading opportunities like the 1-hour time frame. You can come to these lower time frames and look for trading opportunities. And the normally, like I discussed earlier, or I'm discussing, the monthly time frame is normally for direction. Is okay. So we have kind of low connection, so the monthly time frame is kind of a direction. So for the purpose of this video, I will be discussing engulfing and bearish engulfing candlesticks, that is bearish engulfing and bullish engulfing. So the best time frame to use that is the daily time frame. So on the daily time frame, if you want to observe the daily time frame, we are going to observe something of this caliber. I hope you understand. We are going to obtain something of this caliber. So I'll be exhausting you on a particular very fantastic notion. I will use this time frame here from this particular point here. I hope you understand this time frame, and I'm going to also use the time frame here so I will explain what I want to explain for you to understand better. So this concept is very important. So these are the things that I'm going to be explaining to you under the concept of engulfing candlesticks and bearish engulfing sticks. Like I said, engulfing candlesticks are reversal patterns. Is it okay? They are patterns that shows that the market is going to go the other way. If the market was bullish, it's going to be bearish, and if the market was bearish, it's going to be bullish. That's just it. And if you discover this on the daily time frame, guys, imagine if you discover the daily time the bullish engulfing candlesticks or the bearish engulfing candlestick at the point it is just beginning. Believe me, guys, you're going to make a lot of money. That's how pro traders do. This particularly concept of position trading if you want to start position trading. So let me begin with the bearish engulfing candlestick. Normally let me begin the bullish engulfing candlestick. The bullish engulfing candlestick is just a pattern that shows that the market was on an uptrend. So since the market was in an uptrend, normally what we are going to observe is that the market was on an uptrend. From this data, this is what we observe. We are going to observe something like this. Normally the market was in this direction from this top point to this top point here. The market was in an uptrend, but as time goes by, we observe the market being at this particular point is being resistant to particular aspect. For instance, if I try to bring the chart around this particular point, you are going to see clusters. You see clusters. So when the market begins to form clusters, what I'm trying to say here is that at this particular point where you see the market forming cluster here like this, here let me specify here, when the market begin to form clusters or when the market begin to range, that is a strategy that you are going to use. Whenever you see the market begin to range at a particular value, you try to find out the market structure. Once you locate your market structure and you see that it's a potential trend from where the market can reverse. For instance, if I want to bring in this way so you can see, you are going to observe that from this particular point, if we are to draw from this particular point to this particular location here, this is what you are going to observe. This is where we are, and if I'm drawing a trend line here, this is where we are. So we have 2 points here. The first point being the first arrow here, and the first point being we have the first point here. The first point, let me just indicate the first point. The first point being at this particular point. Yeah, this particular point here. Yeah, that's the first point being at that particular point, and the second point being at this particular point. Let me just insert so you see. So we have a point being at this particular point. So those are the aspects that we're going to see from now. So since we already observed that we have a clear imagine that what those particular aspects can have. So when you begin to see point like this, is for you to start paying attention that the market, some particular histories can occur. I hope you understand. So you are going to be observing that a particular history may occur. That is the first criteria in which you are going to be seen. So let me delete these two what I just inserted now, so we can analyze the market better. So since you have already analyzed the market in that aspect, what we are expect, this is where we are. So this is where we are. This is where we are. So if you expect that range begin to form at that particular point, at this particular point, you have to be careful. You have to be careful not to place your buy or not to place your not to place buy or sell. You have to be careful. So at this particular point, you see a market has been in a bullish trend and the market is about to reverse, and you see a bearish candlestick or is forming. Normally the always trend is, or the trend for a bearish for a bullish engulfing candle always begin with sponsors. Sponsors are just patterns that are going to have, generally they're going to have two bearish candlesticks. Remember this price action. We're going to have two bearish candlesticks, and the two bearish candlestick, the first candlestick is always larger than the smaller candlestick, and the third candlestick is always a bullish candlestick. So you are observe that trade for so you are going to observe that for a bullish engulfing candle, it begins by forming a sponsors with two defined bearish candlesticks followed by a bullish candlestick. Meanwhile, the second bearish candlestick is always smaller, as that is the first candlestick has a larger body. So if you want to observe this is what we are going to observe. The first aspect, we have seen a bearish market. Let's see what the market opens for that day. So we see the market begin so you see a bearish candles beginning to form. I see a market ranging between bullish, bearish, bullish, bearish. So the market is ranging in a pattern. At this particular point, the market shows no move. That's why we say the market is on a temporal range. This is what I'm saying here. Your attention should be here. At this particular point, the market is ranging. The market is ranging, not moving. So let's see what comes in the upcoming weeks. So you see on the upcoming weeks, the market begins to form. That's the market is still bearish. For the upcoming days, we see a bearish pattern form. So this is what we call a sponsor. Generally, when you begin to see this pattern being formed in any we are doing price action here, and this is a bullish this is a bearish sponsors, or it's a you can say it's a yeah, this one is a bearish, this one is a bullish sponsors. Let's not confuse ourselves. It's okay. The market was in an uptrend. So since an uptrend, we are going to have a bearish sponsors, as well as we have a bearish engulfing candle. I hope you understand. So at this particular point, this is what we're going to have. This line here, what we have here, the first candlesticks, the first two candlesticks are the first three candlesticks, two the first two bearish candlesticks followed by the first bullish candlestick is what we refers to as uh, a a bearish sponsor. That's a bearish sponsor on and on a bullish trend, and this simply indicates that the market is going to reverse. So I begin to have these early patterns in key points at this particular point. Remember, we had a key structure at a key structure level like this one. Remember, from what we draw, we saw a very key particular structure. So when we begin to have this pattern in key points like this, or in trend pattern like this, or when you already observe the market structure like this, you should be analyzing that the market is going to reverse. And at this particular point, I already observed this. So what I'll be expecting a bearish move. I'll be expecting a bearish move, because for any uptrend, for any uptrend. If there's a reversal, you are going to have ranges. When you have ranges, you are going to have, you can have bearish, or you can have bearish sponsors or bullish sponsors. Then from there you're going to have a displacement. So the next aspect that we're analyzing here is a very huge displacement. A huge displacement is a very great move of candlesticks, a very large move of candlesticks. For instance, this was a bullish display, for instance, from this pattern to the, from here, from this time frame to this point, that time frame here, you see here, this was a very great bullish displacement pattern. So at that particular point, since I've already obtained my, since we are now at this particular point here, since we are now already obtained at this particular point here, let me draw again so I can see, and we have already determined our bearish sponsors, our bearish sponsors that the market is going to reverse. So I'm going to be expecting this same, so I'm going to be so I'll be expecting with that time frame, I will still be expecting this very huge displacement, this bullish displacement in the other trend. And in this case, when it comes at this particular point here, we're doing price action. When it comes at this particular point, I'm going to expect a very huge displacement also. But displacement now will be a bearish displacement. I hope you understand. So let's see what happens in the future. You have to understand. So a bearish displacement has begun to happen. That's a bearish displacement has begun to happen. And if one happen in the future, we see it retests for some Y, it retests, it goes up, it retests and forms a double top bottom, a double top pattern. And once it forms a double top pattern, once it has already formed this double pop pattern, it's already a clear a clear, once that formed the double top pattern, it's already a clear confirmation that the market is going to go down. But already with this bullish displacement pattern that I showed you here, what I'm saying is this already with this bullish displacement pattern that I saw here, that I expect it to be in this other side, already with a confirmation of the double top pattern, I can confirm and I can attest that this market is going to be a reversal, because we have a very bullish displacement and we also have a mighty double top pattern. I hope you understand how you see those two double top pattern. So those two double top pattern are already clear indications that the market is going to be a reversal. So once you already obtain this, what you have to do is to go to lower time frame and start looking for going short, look for shorting opportunities. So once you already obtain these, you can now go to the daily time frame and start looking for shorting opportunities. For instance, let's see what happens in the future. You see what happens in the future, right? So you see what a very great action that occurs. So that's what happens in the future. So this is what we said, this is what we were saying. Since we already observe a displacement in this pattern that went like this, coupled with a double top pattern scenario that we already obtain also, the double top patterns, this first double pattern and this one on the left side, those are two double top patterns. So we confirm that since there was a bullish displacement, we are also going to have this bearish displacement. Why do I say so? You see, these are the bullish displacement and bearish displacement pattern are always working the same. For instance, they always say any reaction force is always being embarked by, any action force is being required by a reaction force. So generally, so we are going to say this normally by definition, this our bullish displacement, this our bullish displacement was our action force. And if you are wise enough on this trade as to look for trading opportunities, you should be thinking of this normal reaction force that will give a very great bearish displacement. So that is how you analyze bearish that's how you analyze bearish engulfing patterns on a bullish trend. I hope you understand. That's the first aspect that you're going to do. So in the market, you see the market goes down and even and the market sells further. So the market sells further, and even goes right down again. The displacement is such that is very massive. This is deep profit. This page, so you see how much money you should have been making if you enter the trade at the top from where it was beginning. This strategy is very good for position traders. If you're a position trader, this is what you have to be doing. You have to be looking in any trade. Make sure you master key levels, and make sure you took a look of bearish sponsors and bullish sponsors at wherever trend begins. I hope you understand. It almost works the same for bearish. It works the same for bullish engulfing candles. For instance, at this particular bullish engulfing candlestick, what you see is that first you are going to observing. We are here. This is where we are now. So we are analyzing from this end, so from this particular point you see a bullish pattern. The first aspect, or let me just say, the first two aspects that you first of all see, you first of all see from this particular point, just beside these two candlesticks being formed, these two here, those are two candlesticks. You begin to see a bullish sponsor, that is the first candlestick. The first candlestick is we have two bullish candlesticks followed by a third bearish candlestick. But generally the trend is always that, the first bullish candlestick is higher than the second bullish candlestick, and the third candlestick, which is a bearish candlestick, and whatsoever. So that was also the beginning of a bullish sponsors, conforming the presence of conforming a reversal. So bullish so sponsors candlesticks and engulfing candlesticks almost work in the same pattern. If you master and understand all the two, you will have great opportunities to trade. So at that particular point, you see the market begins to, since we're on a reversal pattern, it means that this great action here, this great move down here, is what we call as an action force. So now, seeing it has been undergoing some action force and it has been overbought, we are going to be expecting a reaction forward, and coupled with the bullish sponsors and the engulfing candlestick will begin to see at the bottom there, at this point here. At least it should give you a notion. Yeah, I mean, from this point here, from what you see at this point here, right? From what you see at this point here, at least it should give you an understanding that you're going to have a reaction force, which will be covered by a bullish displacement pattern. So let's see what happens in the curve forming feature. You see a bearish pattern begins to form. The market begins to go up. Let's see what happens in the upcoming features. So you see from that particular point, the market moves again and go uptrend again. So the market moves and goes uptrend again. So this is where the market moves and goes to again. So the market moves from this particular point. We are here. So this, or let me just increase. If we analyze the market better, so we see if you enter the trade, let's say if you enter the trade at this particular point, it means that you should make some profit, and the market must have moved from this particular point to this particular point, to that top pattern there. So that's what you should be expecting. So these are the strategies and the best scenario for position traders. I know this has made so much sense, and once you observe this, you don't just enter the trade like that. These are key levels, and I mean, these are engulfing candlesticks being established on daily time frame. So for you as a trader, you are going to now go to lower time frame, like the 4-hour time frame, and start looking for trading opportunities. I hope you understand. You don't just enter a trade like that. See, yeah, from here, since we have analyzed the market, and the market, it was in a long run, depending on our analysis, if you confirm your trade, that a bearish engulfing candlesticks was being formed, then you can begin to go short from that particular point. So you don't just enter a trade, you come to lower time and look for best time to enter into a trade. Normally at this particular point, it's not good to enter a trade. You wait first the market to be bullish a bit before you can enter the trade, or better still, you can confirm your strategy with the 4-hour time frame. So even with the 4-hour time frame, you see the market is going to be going to retest a bullish trend before it comes down, before you can enter trade. So this is it, what has to do with engulfing candlesticks and sponsors, engulfing candlesticks and sponsors patterns. I'll be explaining a very fantastic video of sponsors in another video. This was probably for engulfing candlesticks, but I could not talk of engulfing candlesticks without speaking of sponsors. So I know this has made a lot of sense. So do smash the subscribe button, subscribe, the video, share, like, and also leave all your comment in the comment section. Drop a comment in the type of video you want me to upload, and I will upload it for you. So see you. Continue to be a profitable trader. Peace out.